Last week, mortgage rates dropped to the lowest they've been all year yet again. This, of course, was due to the PCE inflation report that we've been expecting for the last few weeks, and we'll cover that here in a minute. Both overall housing inventory and new listings actually saw a decrease nationally this week, and we also had 13% more people applying for mortgages this week compared to last year. Both Dallas and Collin counties continued heating up, and we can expect that to continue until about June. Housing prices in Dallas County are already starting to rise a little ahead of the spring market, and I would expect Collin County to follow in the next week or two. We'll be covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We'll be looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is March 3rd. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. Starting with market news, the only real market news we had this week was the PCE inflation report that we had already been expecting and talking about in the last few videos. If you'll remember, the CPI inflation report came out a few weeks ago and showed core inflation at 3.3%. But when we zoomed into the underlying data, it was clear that this PCE report would not be nearly as high, which is why, even though inflation said it was going up in the other report, mortgage rates actually came down. And the Fed cares a lot more about core PCE inflation because it's broader, it accounts for changes in consumer behaviors, and places considerably less emphasis on housing costs, which, as we talked about in the last report, the problem with it is it's so heavily skewed towards housing, and the way they track it is so delayed because they're tracking rents, and when you sign a lease, it's a minimum of 1 year. So it's a very delayed indicator and can make inflation look much higher for much longer than it really is. So that's why the Fed favors the PCE inflation report, and this report showed that overall inflation increased by 0.3% month over month to an annual rate of 2.5%. But core inflation, which is the more important number, it also rose by 0.3% to 2.6 annually, which is actually a step down from the upwardly revised December number of 2.9%. So looking at the chart, hopefully this makes more sense. You can see we revised upwards to 2.9% last month, and this month came all the way down to 2.6%, which is the lowest we've been since between March and April of 2021. So it's actually a pretty big deal that we got that low. And that's not to say it won't also get revised in the next report the same way that December got revised up. Although I would say this is a lot more likely just because of holiday spending is a lot harder to track. But at the very least, we can definitely say it's not going to continue going up. It's definitely coming back down, which is what the Fed wants. And then some other good things about this report. Personal income rose by 0.9% against expectations of just 0.4%. So people are taking home more money, and usually that could be a bad thing because it means then people are going to spend more money. That's a problem we've had this whole time with unemployment being so low. It's been too many people making too much money and spending too much money. However, so far the higher incomes have not translated into more spending, as spending was forecasted for a 0.1% increase, but instead it was actually a 0.2% decrease. And then on top of that, looking at this chart, the personal savings rate saw a big jump up, breaking a long downtrend. So you can see we were at a 3.5% personal savings last month, and we jumped all the way to 4.6% this month. And then for context, over the last decade, the average personal savings rate should be around 6.2%. So being way down here in the threes is nearly half of normal personal savings. So in summary, core PCE inflation came down quite a bit. At the same time, people are making more money, but instead of spending it, causing more inflation, it looks like they're starting to save again. All of these are very good things for the Fed to see, and it's the reason mortgage rates continued dropping last week. And I almost forgot, I believe this Friday is going to be the BLS jobs report, which is the next big part of the equation is the labor market softening? I believe that should come out Friday, but I wanted to show you ahead of time, and I'm sure this is part of rates as well. We saw a big spike in the number of jobless claims. So if we can get the combination of people are spending less, inflation is coming down, and unemployment starts to go up, we are going to see lower mortgage rates a lot sooner than we thought. So we'll see what that report is on Friday. Okay, moving on, let's start with national housing inventory. This week we actually had a decrease of 736 less homes for sale in the country. This drops us 3% down to just 26% more homes on the market than we had last year, to a total of 639,485 homes available for sale in the country. This same week last year, inventory was only at 498,339. So still way better than last year. Then for reference, the all-time inventory bottom in 2022, we had about 240,000 homes for sale. The peak of last year, we had 739,000 homes for sale. This same week in 2015, we had about 963,000 homes for sale. Now looking at new listings, this week we have 1,205 less new listings than we did last year, for a total of 53,394 homes listed last week. And you can see that's the difference between the bright red line and the dark red line. So it is a little unusual. New listings do seem to have stalled this week, but that's just 1 week data. We'll have to wait and see. But it would not be good if new listings start lagging behind and mortgage rates drop, which brings demand in. So hopefully these new listings pick back up and we see more of what we saw back in 2022 numbers, or really even higher is what we need. So hopefully that's just 1 week, and then we're gonna get right back on track with a lot of new listings moving forward. Now looking at pending sales, this week we remain at 4% fewer sales pending than we did last year nationally. Of course, Dallas and Collin County, we have way more pending sales because we're the #1 fastest growing metro in the country, and I'll show you those numbers later. But nationally, sales are still a little bit behind. But overall, this number should keep trending up until May or June. And this week we have 312,742 homes pending in the country, which is about 12,000 more than we had last week. So you can see we're still going up at the normal pace. We just started a tiny bit slower, but this can turn at any time, especially if rates actually do continue down. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we had a small increase this week up to 33.7%. We've been at 33% for the last couple weeks, more or less. And as you can see, looking at last year, about this time is when this number should start trending up. I just want to point out, don't think that just because this number started higher or started trending up earlier means that it has to go higher than it did either of the previous 2 years. You can see last year we got as high as 39.9, and the year before we got as high as 39.2. So very similar peaks, even though the curve started much earlier last year. But either way, just know if you want home prices to come down, then this number needs to be going up. And looking at the charts, it should be going up until somewhere in September, October. Okay, moving on and looking at mortgage rates, we started last week at a 6.87, and we just went down all the way during the week to 6.74. And one important thing I want you to see here is right now we are actually 0.36% lower in mortgage rates than we were this time last year. Last year we were at 7.1% right now. Currently we're at 6.74. So it may not feel like things are getting better, but they are. You can see this number is obviously trending down. Then looking at the number of people applying for mortgages, that's the Mortgage Purchase Application Index. You can see week to week, we saw a tiny increase. That's basically flat. But because we were supposed to have another big drop last week and we didn't, that actually got us to 13% more people applying for mortgages than last year, which is this bright red line. That's this big gap is 13%. And that probably has something to do with mortgage rates coming down last week. But I've been saying this for more than a year now. I still believe it. The real demand, when this goes above both of these lines significantly, is not going to happen until rates get and stay below 6% for a sustained period of time. The evidence we have for that is new construction has been offering below 6% for a long time, and they've been selling way better than existing homes. So there is definitely demand below 6%. All right, now let's move on to the local markets, starting with the MLS data of Dallas County. We're starting with new listings. This week in Dallas County, we had 649 new listings. You'll see we had a drop the last 2 weeks. It looks like we made up for it this week with 145 more new listings than the previous week. We had 347 closings, which is 120 more than last week. And I think we had such a big drop and then big spike here because we did have one holiday last Monday. So that's probably why these two are a little skewed like that. 69 of the sales that closed were immediate sales, meaning they contracted within the first week. That's 26 more than last week. We had 319 contracts, which is 7 more than last week. And in total, And the total number of homes either under contract or in pending status, we have 2,143, which is actually 31 less than we had last week. Then moving on to Collin County, we had 466 new listings. That's 159 more than last week. We had 294 closings. That's 101 more than the previous week, so big jump in closings. Of the homes that closed, 54 were immediate sales. That's 14 more than last week. We only had 157 contracts. That's lower than normal. That was 49 less than last week. And in total, there are 1,769 homes either under contract or pending, and that's 93 less than last week. Now let's take a look at the market action index, starting with Dallas County. If you've never seen this, it just takes into account all of this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in? We are currently at a 38, which is a slight seller's advantage. You can see we're obviously heating up. And all we're looking for here is, are things looking normal, or is anything looking weird that we should be concerned about? The normal thing is this time of the year should be when things are heating up, as we talk about every week. What is abnormal is that we started heating up since way back in December. That's a lot earlier than we should be. Looking at prices, we held firm until this week. It looks like we're finally starting to climb, which would be the normal time to climb seasonally. Actually, maybe another week or two would be normal, but prices are going up a little bit sooner. The median price of new listings has been going up quicker, but for overall listings, prices are starting to go up. You can expect them to go up. This doesn't mean they have to go up super fast or things are going to get out of control. This is just normal. More demand is going to be coming in here through the summer. So just expect, if you want to wait, you're going to be paying more for the house. That's just how it works. Everyone wants to move in the summer. There's too much demand in the summer. Basically, every week from here on out, these are going to be the lowest prices. If you contract this week, that's going to be the lowest price you're going to get this year. If you do it next week, that's probably going to be the lowest price, and so on all the way up until we get in the summer, and then you can just assume whatever week you're contracting, that's going to be the highest price you're going to have for the year. And then we'll start to cool off again during the winter. But that also doesn't mean you shouldn't contract during the summer, because the upside to that is you're going to have the most choices to choose from in those summer months when everyone is listing as well. So don't think just because if you wait until the winter to buy, you're going to have a lot less options to choose from. You may not find the house you want. So there's more to it than just getting a low price. You also got to find the house you want, but just keep that in mind. If the house you want exists today, it's going to cost less than it will in the summer. Average days on market has been holding firm for a very long time. Median days on market dropped last week to 70, so it'll remain there probably for a while. Number of homes having price decreases is actually still going down a little bit, whereas the national went up. Dallas County went down. Inventory, it's not going up. We can at least say that. It's more flat. And then of course the market action index is climbing. So nothing unusual here. We're heating up a little bit sooner than normal. We have our first sign that prices are about to start going up through the spring and summer markets. Now let's look at Collin County. Collin County, as we've been talking about, took a little longer to heat up, whereas Dallas was in December. This started in January. So not a huge difference, but their prices did take a much longer time to find a bottom. We remained about flat this week, but I do think that this, somewhere around here, beginning of February, that was the bottom of prices for the year. You can see median price of new listings as well jumped up. They both held steady this week, so we'll see, but don't expect them to go any lower from here on out. Their average days on market went up by 1, but their median is much lower at 63. And a lot of this is, a lot of Collin County is new construction, and they can have very high days on market because sometimes they'll list a house when it's still 6 months from even being completed. And so by the time it's actually finished and you can go look at it, it has very high days on the market. And that's why the median is lower, but the average can be much higher. Their number of homes having price decrease, just like the national, had a small tick up this week. Their inventory is dropping, still dropping. Their market action index finally broke out above that 35.63. So things are definitely heating up there as well, just not as quickly as Dallas County, but all of that is normal and what should be happening this time of the year. So everything's looking good. Let's move on. First, I just want to show you the pending sales, the contrast between, you remember nationally, we're still down. I just want you to show you this black line is Dallas County. We obviously have way more pending sales than last year. Collin County, this line just looks insane, and it is leaving the last 2 years way behind. That, of course, is because this is the number 2 fastest growing county by number of people in the entire country. But man, that is a lot of growth. From one year to the next, 1,359 homes to 1,776 homes. And remember, you're contrasting to nationally, we're still down several percent. But now let's move on to our top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that market action index number. Starting with the hottest cities list, Carrollton, Texas remains and has been there for many months, the number 1 spot at a 47.09. Then Louisville heats up 1 this week. Richardson heats up 2 to take number 3. Coppell cools off 2. Plano cools off 1. Grapevine heats up 1. Grand Prairie cools off 1. Ferris jumps on at number 8, Irving cools off 1, and Allen cools off 1. So Ferris jumps on at number 8, and then Princeton, which was number 10 last week, falls off the list. Then we like to zoom into the specific zip codes. The absolute hottest is Plano, Texas, 75093 at a 51.41, followed by Grand Prairie, 75052, Carrollton, 75007, Richardson, 75080, Louisville, 75077, Plano, 75025, Dallas, 75234, Carrollton, 75006, Plano, 75074, and Plano, 75023. So if you have a home in one of these zip codes, then you should be able to sell for top dollar. Moving on, the same thing, but the coolest cities and zip codes. The absolute coolest remains and has been for a very long time, other than maybe 1 week. That's Blue Ridge, Texas at a 28.93. Then Lavon cools off 2. Van Alstyne remains at number 3. Sunnyvale heats up 2. And all of these are the buyer's markets. Once we get to Royce City, which cooled off 1 this week, we are out of buyer's markets, just barely. Then Leonard heats up 1, Rockwall remains, Nevada cools off 1, Prosper jumps onto the coolest cities list at number 9, and Salina heats up 2 to take the hottest city on the coolest cities list. So Prosper jumps on at number 9, and Red Oak, which was the hottest city on the list last week, heated up off the list. Then looking at specific zip codes, the absolute coolest is Grand Prairie 75054, followed by Blue Ridge 75424, Rockwall 75032, Lavon 75166, Van Alstyne 75495, Sunnyvale 75182, Royce City 75189, Leonard 75452, Nevada 75173, and Prosper 75078. And I want to show you why it's so specific to zoom in on the zip codes, because if you were to see this, you would see Grand Prairie is the number 7 hottest city in all of Dallas and Collin counties, yet Grand Prairie 75054 specifically is literally the coolest zip code in all of Dallas and Collin counties. So you can have a very hot city with a very cool zip code. That's why it's important to look at both. Remember, if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.